DSCR pre-approval for a short-term rental. Hey, what's going on, everybody? It's Jeff Trevarthen, Jeff the Mortgage Pro. Thanks so much for watching the video here today. I really appreciate it. This is going to be a good one because we're going to talk about how do you get pre-approved for short-term rentals. It's a question that I often get. It's a little bit different than trying to apply for a conventional loan because DSCR, remember, is looking at the cash flow of the property itself versus the actual income of the borrower. And that's the main difference between these two different types of loans. They're still typically 30-year fixed loans. You can do interest, 5/1 ARMs on them, 7/1 ARMs. You can definitely look at interest only in some options. And then, these are the way that it works for these types of loans. So remember, when you're looking at conventional loans, the way that it works is that we look at the borrower's income of the of themselves. So we're looking at things like their tax returns, their pay stubs, their W-2s. All of those things are necessary to get you qualified for a conventional loan when you're doing a purchase. Now, if you're buying a short-term rental with a conventional loan, you're most likely going to need to buy it as an investment property. The guidelines have changed over the last couple of years. Too many people were taking advantage of the, quote unquote, second home loan, where it was treated more like a primary residence purchase than it was an investment property purchase. And the lenders got privy to that, and they decided, hey, we're going to make this a little bit stricter because occupancy fraud is a big thing. And people were saying they were going to live in those properties as a second home, but then they would turn around and rent them out as Airbnbs. So nowadays, if you're going to do a conventional purchase, it's going to be treated, a conventional short-term rental purchase is going to be treated as an investment property. So it's a little bit more restrictive with that type of qualification. So the DSCR loan qualifying for a short-term rental property is a little bit different. So there's three things that we need to do in order for you to get ready to go. And the first one is to fill out a loan application. Now, this is the same loan application that you've probably filled out before if you've ever purchased a property. It's no different for this type of an application for this type of a loan. It's literally asking about income, assets, credit, and liabilities. The only difference on this one is that we don't need your income. So when it comes to the income questions on there, like what's your, who's your employer, how many years you've been on the job, you can just leave it blank, or you can put not applicable in there, and we don't have to worry about that because on our end, on the back end, we can get rid of the income because we don't need it for a DSCR loan, which is the coolest thing that I love about these loans. The second thing we're going to do is we're going to need to collect documentation. So there's a couple things we're going to need to do, and again, it's a little bit less because we're looking at things. We're looking at the rental income of the property itself, not your personal income. So we need the last 2 months worth of your bank statements or asset statements. And this is going to help us determine, do you have enough money for down payment, cash to close, which is inclusive of closing costs, and then the reserves that are required on DSCR loans. And if you have enough money in one account, you can just give us one account. If you have multiple accounts that you need to pull the money together for this, then we're going to need account statements for the last 2 months for each of those different accounts. And then we're also going to need to verify your identification with an ID, a copy of your ID, so driver's license, passport, things of that nature. And then you're going to need mortgage statements for any property that you've already owned. So if you own a primary residence and has a mortgage on it, we're definitely going to need that mortgage statement. We're going to need any mortgage statements that you have for finance properties that are residential properties. I don't need any commercial type stuff, but that helps us verify your liabilities and matches those up with the correct property so that we know that there's mortgages on those. Now, different DSCR lenders, they don't always need all those documents, but I'd rather collect everything up front from you, and then instead of having to come back to you over and over again to be able to get these types of loans done. So I'm going to collect everything up front, and that includes all the mortgage statements that you have on your different finance properties. Okay. If you don't have any other finance properties, that's great. So if you own properties that are free and clear, a little bit less documentation for you. And then again, the things to reiterate that we don't need, we're not going to look at tax returns on this type of a DSCR loan. We're not going to look at pay stubs or W-2s or anything like that. So you can just keep those in your own personal folder and not send them over to us because we don't need them. Okay. And then the last thing we're going to do, so we fill out a loan application, then we collect your documentation, then we're going to do a credit check. And that credit check is most likely going to be a soft credit check to begin with. I always try to do a soft pull on credit or on purchases, just so we don't have to ding your credit going forward. And what we're going to try to do, and if I forget to send this to you, always remind me to send this to you, is we're going to send you a credit opt-out form so that you can go to the appropriate website and fill out your information online, and hopefully you don't get any trigger lead calls. So what a trigger lead is when somebody runs credit, and you'll often see this like with VA loans, which are very attractive loans for lenders because they're high profit margins on them. But most different types of loans where you have good credit for mortgages and you run their credit, you're going to get trigger leads. And this is not us as mortgage brokers that are selling your data. That has nothing to do with us. It actually is the credit bureaus who sell your data, because people will buy that information, and when your credit is run, they get notified that your credit was run, and you're going to get inundated with calls if you don't opt out from that credit report, those credit inquiries. So always try to make sure that you do that first, and that will limit hopefully the number of calls that you get for, solicitation of somebody trying to do a mortgage pre-approval for you when you do that. Okay. So run your credit, usually do a soft pull first. You won't have anybody call on a soft pull because that data isn't sold. It's not even reported to the bureaus that you're doing a soft credit check on there. But then when we do the hard pull, that's the one where you could get inundated with spam calls, I would say. And we want to make sure that you opt out for that. So 3 steps, again, fill out the loan application, provide us your initial documentation, run your credit, and then we can issue the pre-approval after that usually. So the main thing that's kind of interesting when you're trying to look for a short-term rental is, and the question I get often is, how do you calculate the rental income that you could get on a property? There's a couple of different ways to do it. When you're searching for a property, it's necessary to know what the target price point is. And we're going to determine the target price point based off of your assets. So how much down payment do you have? How much cash flows do you have? And how much do you have in reserves? We can kind of figure out a maximum number from those, the number that you have for your assets. And we can work backwards from there. That'll be your maximum purchase price. And then you can always buy something less than that. But how do you determine the rental income of the property? Well, funny enough, in short-term rentals, there's a data website that provides some really, really good information. And some of the lenders actually use this information to determine what the potential rental income is for the short-term rental. It's called AirDNA. And I'll put a link on that down below. So if you want to click on it, it's a subscription-based site, but it at least helps you get an idea of what a potential rental income of that property would be. I believe the website, compares data from other. It's kind of like a data aggregator. It looks at like vacation rental by owner. It looks at like Airbnb, and it kind of pulls that data in there and determines how much. Number one, how much do you think the property will be occupied in a given month? So it determines the occupancy of the property, and then it also helps you determine the rental income based on how many nights it should be rented per month, and then also what the average nightly rent is. And it factors in seasonality. There's going to be some high seasons typically, and then some low seasons. So it's going to give you an average of all those numbers, but at least you'll be able to get a good idea of what your rental income is. But the cool thing about AirDNA is that some lenders will actually use this information, the AirDNA report, to use that as their rental income to qualify for the property. So typically, they're just not even going to need to verify it with the appraiser. The appraiser is just going to determine the value, and they'll use the AirDNA data if the property is a good one to be able to get you the loan. But if the AirDNA data doesn't work, they still might need to do a short-term rental survey as part of the appraisal. And so you can still get a loan even if the property isn't like projected to be a great rental property through AirDNA. What I find with AirDNA is that properties that may be a little bit more rural or a little bit more remote and may not have a history of AirDNA, maybe they're not quite in a typical vacation destination, sometimes the data is a little bit off. But in any event, we'll talk about that stuff in another show. Hopefully this made sense to you. Pre-approvals for short-term rentals on DSCR loans. Basically, again, we're looking at your application. We're looking at your documentation that supports how much down payment, cash to close, and reserves you have. And then we're looking at running your credit as a soft pull. So if you meet all those 3 things, we're going to get you pre-approved pretty quickly. It may take 24 to 48 hours max, and we'll be ready to go after that. So thanks so much for watching, guys. I really appreciate it. If you enjoy this, please go ahead and click on my calendar link down below. I'd love to schedule a time with you and chat with you a little bit more about your pre-approval for your short-term rental. Have a great day. Bye.